Every April, over 160 million Americans fill out tax forms, hit submit, and watch their money vanish into something called federal revenue. But what actually happens after that keystroke? Where does your money go? Who gets it first? And how much of it ever comes back to you? According to the U.S. Treasury, the government collected about $4.9 trillion in 2024. Half of that came from individual income taxes, roughly a third from payroll taxes for Social Security and Medicare, 8% from corporate taxes, and the rest from excise and tariffs. But those dollars don't get labeled for teachers or highways. They all flow into the Treasury's general account, a single massive checking account used to pay for everything from aircraft carriers to public parks. It's the world's largest crowdfunding project, except participation isn't optional. The first people to get paid are not government workers or schools, they're bondholders. About 8 cents of every tax dollar immediately goes to pay interest on the national debt. That's over $600 billion a year, more than the budgets of most federal departments combined. According to the Congressional Budget Office, by 2030, interest payments will surpass defense spending. The next biggest slice funds Social Security and Medicare, programs that run automatically because citizens already paid into them through payroll taxes. Together, they take up nearly half of federal spending before Congress debates a single new bill. What remains is called discretionary spending, the part that funds defense, education, science, and infrastructure. That's the money politicians actually fight over. In 2024, the defense budget totaled roughly $886 billion. About half of that went straight to private contractors like Lockheed Martin, Raytheon, and Northrop Grumman. President Eisenhower once warned of the military-industrial complex, and he was right. It became a permanent part of the economy. Each contract creates a small ecosystem of jobs and suppliers across congressional districts, making big cuts politically impossible. Fiscal policy in Washington is less about math and more about maps. But the government doesn't just spend through budgets, it also spends by not collecting. Around $1.7 trillion a year vanishes through tax expenditures, deductions, credits, and loopholes that function like spending in reverse. When Congress allows a business to write off equipment or a homeowner to deduct mortgage interest, that's money deliberately left uncollected. According to the Government Accountability Office, the top 20% of households capture over half of all tax benefits. The system rewards ownership and investment far more than wages. Wealth generates tax breaks. Labor simply pays them. A quarter of all federal dollars go to the states. That money funds Medicaid, highways, and education grants, but it's not evenly distributed. The Census Bureau shows that for every dollar New Jersey sends to Washington, it gets about 80 cents back, while Mississippi gets $2.60. In other words, some states are donors, others are dependents. And subsidies blur the picture further. Agriculture insurance, energy credits, and research grants quietly transfer billions from federal ledgers to private corporations. Economists call it partnership. Critics call it welfare for the well-connected. Then there's the debt illusion. The United States isn't broke. It operates within a fiat system where debt is a tool, not a failure. Treasury bonds are simply IOUs bought by investors worldwide, pension funds, banks, even foreign governments. About 1/3 of U.S. debt is held overseas, mostly by Japan and China. But the interest on all of it comes from tax payments. Rising interest rates mean new bonds cost more to service, leaving less for other programs. The Congressional Budget Office calls interest the fastest-growing federal program no one voted for. Every day, the Treasury posts its daily statement online. It shows, down to the penny, what came in and what went out. On a random day in October 2025, $23 billion came in from payroll withholding, $19 billion went to Social Security, $8 billion to defense vendors, and $2 billion to debt interest. The rest sat waiting for tomorrow's bills. It's a national checking account that never truly balances because the customer is an entire country. So, where does each dollar really go? On average, 24 cents funds Social Security and Medicare, 13 cents goes to defense, 12 cents pays interest, 11 cents funds health programs, 8 cents supports income security like SNAP, 7 cents goes to education and training, 6 cents helps veterans, and the remaining 19 cents covers everything else from foreign aid to NASA. Most spending isn't for today's needs. It's for promises made decades ago. We're not funding the present, we're financing the past. Taxes are often seen as punishment, but they're really a mirror reflecting national priorities. Every deduction is a political choice. Every interest payment a relic of old decisions. Every budget a list of values priced in dollars. The story of taxes is not just where money goes, but what each society believes is worth paying for. So the next time someone asks where your taxes go, you can answer honestly, everywhere. And that's exactly the problem. This is The Human Timeline, where history meets finance. Subscribe for more stories that turn headlines into history lessons and numbers into narratives.